Hello, everyone. Welcome back to my weekend market outlook. And today we are going to be revisiting the GBPUSD, USDJPY, and the gold commodity, where I will be taking you through what happened last week and how I am personally preparing for the new week. Last week gave us more clues than noise. Of course, the big one was the Fed minutes. They hinted that officials might cut rates later in the year, but only if the data supports it. Now, that cautious tone should have kept the dollar in check, but here's the twist: the US dollar actually got stronger through the course of the week. Even with the US government shutdown making headlines, the dollar instead gained traction. Why? Well, traders trusted the Fed's data driven stance, the global growth worries which kept safe haven demand alive, and then the US Treasury bond yield was also doing very well. So, with the dollar holding very strong into the weekly close, let's see how that played out in the pairs we are monitoring. So, starting with the GBP USD, what you see on my screen is the 4 hours time frame, and of course, this was what we were looking at prior to the beginning of last week. And remember, we've been tracking this clean descending channel over the last 1 month or so. After connecting the series of lower highs, as you can see here, for the resistance line, and then the lower lows for the support line. Now, last week the pound slid again. Last week started around this area, exactly around the resistance line, dropped significantly, as you can see, and this whole bearish momentum was pressured by weak UK numbers, fiscal worries, and of course the stronger US dollar backdrop. But something interesting happened. I noticed that as soon as price got into this area around the 1.32700 level, the momentum stopped. And this came in exactly after the hawkish comment by Catherine Mann, a Bank of England official, and she reminded market that monetary policy will likely need to stay tight for longer to tame the current inflation. That doesn't spark a full-on rally, of course, but we did notice that it became a flow into the final trading day of the week as we saw some engulfing bullish candle spring out of that area. Now, this gives the pound a bit of a floor, almost like a safety net, and it tells traders that the Bank of England isn't about to rush into rate cuts, which makes the 1.327 for me a credible demand zone going into next week's trading session. Now, to help me navigate this market this week, I have a new structure where the 1.327 I talked about earlier is going to be serving as my key level, right? And as you can see, the descending channel still remains very much intact, and my bias at this juncture is leaning slightly bullish, as I will be watching this whole area. I want to hold this area as a support line, and as long as price remains above it, I will be looking for buying ideas around this area. So I will be looking for more opportunities if price goes ahead to break out of the 1.342, and look at how beautifully it lines up with the resistance line of the descending channel. So if price can break out, retest that structure, I am willing to add more positions to my existing trade. And the only condition that will make me sell the GBPUSD is for me to see price drop below the 1.32700 area. And of course, we do have economic data from the United Kingdom and the United States to help us navigate this market this week. So the first high impactful event is coming in on Tuesday. We have labor oriented data in the form of the claimant count change, employment change, higher low unemployment rate, and of course, the Bank of England's governor's speech coming up later in that day. So, if UK employment beats expectation and maybe the US inflation disappoints during the week, buyers could step in, driving towards that 1.342, breaking out that structure and even breaking higher to find new highs. But if UK data comes in weak or the US report comes in strong, the dollar could regain control, pushing price back below that 1.327 and setting up more downside. So this week is really about how the pounds behave around this key level, especially the 1.327, the 1.33250 and the 1.34200 area. Now, moving on to the USDJPY. Now, remember last week, this is the structure we marked out prior to the beginning of last week. We had this beautiful ascending trend line which captured the bullish momentum since April. And for the fact that price is still riding that ascending trend line, we continue to maintain a bullish bias. And remember that I said I want to be buying at the break of the 147.5, which was actually our key level. Unfortunately, I missed out on that one, but I did updated us that we can join that breakout retest of the 149.950. And with no major Japanese data last week, the sentiment and the strength around the dollar kept on driving the momentum to the upside. But something interesting happened on Friday. As we can see here, as soon as price tested that high here at the 153.3, we begin to notice selling pressure, and that move we saw there broke down the 152.00 level, which I will be watching closely in the coming week. And in fact, it's going to be serving as my key level in the new week. And of course, I do have some new structures that is helping me to navigate this market in the coming week. So as you can see here, I do have a simple ascending channel that captures the character of price action in the last 2 to 3 weeks. And right there is the 152.00 level that I showed you earlier that got broken. And look at how beautifully it lines up with this trend line within that ascending channel. So it's going to be playing a significant role for me in guiding how I will be trading the USDJPY in the coming week. So for me, that break hints that sellers might be waking up, but I'm not calling it a full reversal yet. I will need some confirmations to happen, maybe like price coming back to retest structure, continue selling pressure below the 152, then that could help me incite some selling ideas, maybe back into the support line of the ascending channel here. And going into next week with no big Japanese data scheduled, this pair will mostly move with the US dollar, global risk appetite, and of course the Fed chairman speech, which is also coming in on Tuesday. I'm not sure if the producer price index and the retail sales data will be published due to the US shutdown, as these departments are on close down. I don't know, but it depends on what happens. So if sellers maintain control below the 152.00, meaning we see lower highs and lower lows on the 1 hour or the 15 minutes time frame, I will lean bearish, looking for more downside on the USDJPY. But if buyers manage to reclaim the 152.00 level with a strong close and retest above the structure, that flips things back to bullish, So for me, it's all about watching who wins the fight around this 152.00 level. Is it going to be the buyers or is it going to be the sellers? Of course, time will tell. Now, finally, on the gold commodity, in fact, what a week we had last week. This structure you see here was what we were looking at prior to the beginning of last week. We had a beautiful ascending channel, and as at the time I shared my video last week, price was somewhere around the 3,880 area, just right here. Let me zoom in so we can see things clearly. And remember, I went on to say that if price breaks out of the 3,897, I am willing to join an uptrend move. And at that point in time, the next psychological level I was looking at was the $4,000 area, as you can see. And surprisingly, price even went on to touch the 4,059 level to set another new record high. Now, that's a powerful statement from the buyers at this juncture, showing how much gold is still being treated as a safe haven asset. And with geopolitics, central bank uncertainty, and softer economic outlooks, investors continue to pour into the gold commodity. So, going into next week, and from a technical standpoint, this is the new structure I am looking at, and price is still holding well above a beautiful ascending trend line that is captured after looking at what price action is doing in the last 2 to 3 weeks. And this tells me buyers are still in control. And you know how we do it. As long as price remains above the ascending trend line, we definitely want to be looking out for patterns and structures that support buying ideas. So I will be looking for deep buying opportunities above the structure. As you will see, the last move after price tested the record high is this to the downside. And since Thursday, sellers have been finding it difficult to break below the structure. And of course, this shows that buyers still have a chance to continue. But if we see price break down the ascending trend line or break below it, that will be my first signal to shift and start considering selling. So to help me navigate this market next week, my key level is at a 3,960. So depending on what happens here, so as long as price remains above the 3,960 and this trend line, I maintain a bullish bias. But immediately a breakdown happen and possibly retest of structure for confirmation's sake, that will definitely welcome selling ideas. So for now, momentum is clear, right? Gold remains firmly in the bullish hands at the moment. So we continue to maintain that bullish idea. So to wrap it up, GBPUSD still remains neutral but slightly bullish as long as price holds above the 1.327 with my highs at the 1.342 for more opportunities to buy if price breaks above it. But I said that if price breaks down the 1.327, then we want to start considering selling. Then on the USDJPY, it's all about the fight at the 152.00 level. Whoever takes control here decides the short-term direction of price action. And then finally on the gold, price still remains bullish, price still remains above the trend line, and with safe haven demand keeping the upside alive, we maintain a bullish bias. Unless this trend line gets broken, then we can start considering selling. Of course, I will be in the comment section during the course of the week. I'm sharing updates as I continue to monitor price action. So feel free to check in and add your thoughts too in the comment section. So until next time, trade smart, trade consciously.